The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, and a great pleasure to be here Monday through Friday, 11 o'clock till noon, of course, today being Thursday, April the 3rd. April the 3rd. We've just begun April, and as such, we really have to keep in mind that with the Dow having just today, what I said to my subscribers on my opening call is I said that the 9-cent miss yesterday in the Dow of making an all-time high when the New York Stock, oh, this is so interesting. Let me just get this chart right here. When you look at the New York Stock Exchange, let me just show, while I'm talking about it, I better go there because NYA. All right, here it comes. NYA.X. When you look at this chart and you realize we've just made a peak C in the daily of the New York Stock Exchange, this is 1,800 stocks. A lot of stocks there, very important, way more than the 500 in the S&P. What we're looking at is leg E in the monthly. And what's absolutely fascinating about this is that now in the Dow and the New York Stock Exchange and a couple of the other exchanges, there was such a quick move from D to E in the candles that there's a potential for an instant restart. I just say a potential for an instant restart because that's the way you start these things off. And what does that mean? It means that if we have just started a brand new buy mode confirmation, this could be brand new leg A in some of these monthly charts. I'm just saying that if the stochastic, which is 94%, and the MACD, which is still strong, actually stays up here for a while, I can't fight this, and I have no choice here. I've got this as a leg B in the weekly chart of the New York Stock Exchange. I've tried every which way to count this within the Chapman wave methodology without faking, without form fitting, without doing anything other than what are the rules? Did I follow the rules? And I've got a beautiful symmetrical wedge breakout in the weekly that's gone to a leg B. It's under the up channel resistance. So that, and the stochastic has just turned up. It's at 82%, and the MACD this week, it could cross positive. The week is young. We've still got tomorrow. We've got that whole jobless thing coming up tomorrow morning. You remember I've been talking about for a while that at some point we're just going to get a sudden surge in the job recovery. I don't know if tomorrow's the day. If it is, then we're going to be watching some. This is a critical point, and I'm going to go through it. Critical point in the shorter term and even more the intermediate term. After all, if the New York Stock Exchange can go from the high of yesterday in the weekly chart, if we can go from the 16,626 level just to the apex, 10,386, that's 300 points. That's a pretty big decline, but it isn't anything since we've had such a very nice move to the upside. So what would happen is you'd have to take out the low of 10,513, but that still makes the low bar, let me write that in, 97.32, sacrosanct. It makes it seem that somehow or other we could have a short to intermediate term pullback at any point now, within the next couple of days, and starting in the next couple of days, I should say. And that, so far, it's going to take a lot to change the monthly chart patterns. It would take a decline to 10,300 or below 10,275. It'd probably take a move down to the 10,000 level in the New York Stock Exchange, which is no big deal. It's not even, it's 6%. For it to really negate the low bar of June, was that October or June, of February of 2014. Oh, of this year. God, time flies. So let me just run through a bunch of things that we got to our callers. I will, J&J, I've got a couple of questions in the den. Let me just run the numbers here. Let me move this away and I'll give you the numbers. The Dow is down 7. It was up. It made a new high at 16,604. Now that's really interesting because it was 16,505. I love when you get the synchronicity of these numbers. So I'm going to be watching that, because if it takes out the 606 level in the next couple of days, if instead of being just a horrible session tomorrow, actually there's a very nice move to the upside, and you just have to say to yourself, something is going on in the rotation. Why would Alcoa, why would Ford, why would United Steel, USX, X is the symbol, United States Steel, be doing so well right now under these conditions? What's this whole rotation about? It's just, things are happening here that are unusual in the normal context, but the heavy-duty cyclicals are starting to move. That's part of what you expect in rotational markets. That's number one. Number two is IBB, which is the NASDAQ biotech sector, ETF, iShares. Just failed miserably. We had a long, we are still short from almost 3 points from the top. We are still short that position. We had a long position. We've had a number of trading positions, short and long. We took a long position 3 days ago, took a just over 10-point profit in that single leg spike, peak A, and it's pulled back huge. It's down again, 660 today, 235. The recent low was 228.72. Hey, this is the part of the rotation. I thought by Tuesday, Wednesday, the fund managers would start to try to buy, because they had finished with all their selling, and at least a short-term pop. Well, we got 2 days of pop, and now it's back down again. So that rotation aspect is absolutely imperative to keep in mind. So the numbers are: Dow's at 16,562, down 10. The S&P is down 1 at 1889, doing very nicely considering what's going on here in this rotation, because I thought it might be dragged down by the IBB sector. The comp is being dragged down. It's down 16 at 42.60. IWM, look at this, IWM, the Russell 2000, pulling back from the 118.48 high yesterday. It's at 117.54, only down 1, not even that, down 88 cents. But I'm watching that weekly because of that candle from last week. It's like an engulfing candle almost. I'm going to be watching it real closely, because if the IWM tomorrow slides under 116, or by Monday, that's going to be a pretty big negative. And that's going to be telling us about this cyclical. Look at this IYC. The IYC is the cyclical index. Look where it is. A little blink of an eye, pulled back 20 cents today from 122.29. But it hasn't made an all-time high. And it's in the leg E, possibly peak E, the iShares Dow Jones U.S. Consumer Cyclical Sector Trust. So we'll keep watching it. So we've got gold. Right now, let me just go straight to the gold chart, GC. I wasn't that impressed with the rally yesterday. Right now, it is down 4 at 1287. It's attempting here that flat stochastic at 5%. I don't like that at all. We've got silver down. It was down just now. Yep, down 18 cents at 1987. You've got, what am I talking about? Yeah, silver. High-grade copper is back at $3. Oh, man, that poor old copper chart. It did its best. It really did, to try to hold above 3. But no. Couldn't take the strain. Went to a peak C, pulling back. I suspect there's a chance that it could make that leg D. but the weekly chart's going to be very important where it closes tomorrow at 4 o'clock. Let's go on. We've got bonds, and this is going to be really important. Bonds are up 10-30 seconds at 132 and 930 seconds. The TLT, which I've made a big deal about for my subscribers, we don't have any TLT or TBT. We're just looking at this and saying it went under the 9-period moving average. It failed to make that peak D. And that means that you might even have an alternate count. No, you can't. It's a peak C minus once again. If it falls from here, so far it's just a peak C. It has to go above 108.50, up another dollar to even show that it has the strength so that the weekly chart can start improving and not treat that 108.85 level as a repellent line in the weekly chart. So that's that. And I just wanted to quickly do the DXY. Then we're going to go to our callers. Waiting there. Leg C in the dollar index. Nice call, Tom. Tom's been talking about a rally in the dollar. 81%. I have to put an up arrow that suggests that it could try for the 80.68 level. 80.68 level in the daily chart. I don't want to talk too much about the weekly chart. The weekly chart is just in a trading range. I can tell you this, that if the dollar continuous contract takes over and beats 80.58, the high of the 27th, then absolutely that 80.68 level will become a target. Let's go to our first caller. We got Nahid in Safety Harbor. Hi, Nahid. How are you?
Very good, thank you. How are you, Basil?
I'm very well, thank you.
I'd like to look at Tesla, please.
Okay, so do you have a position right now in Tesla?
Yes, I have a call. Don't have all the information, but I am up about a few thousand, so I'm not sure what to do now.
Okay, well, you see, the weekly, sorry, not the weekly, I wanted to say that the 120-minute chart, just want to check if there's a penny difference here. 227.54, 227, I knew it. Good. We're in leg D in the 120-minute chart. Here's my recommendation. Because there's uncertainty, at least for me, there's uncertainty about tomorrow. I have my own suspicions, but suspicions aren't good enough. So I'm looking at certain stocks that are rebounding, momentum stocks, and that seem to be working better. The biotechs are not working at all. So my impression right now is that Tesla could have a little bit of a pullback. This is a leg A up in the daily chart from the most recent low on the 27th of March at 203, round number 203. Let me put that in, very important, 203 round number low. And it's just shot up to a high today of 235.75. That's a very big percentage. So we've got, what have we got here? Then we've got 30 points. You've got about 13% gain. So this is what I would recommend to you. I would take off. I think for a balance in the right sector right now of a momentum stock that is working, I think that you've got Tesla. I think you picked it perfectly. Now, money-wise, well, we've got a break coming up. That was quick. Give me a second. I just want to do a quick study on the 120-minute chart, and Tesla TSLA is trading at 227.28, down 3. I'll be right back with Nahid and Victor straight after.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. And the Dow is now down 20. S&P's down 278. And stock we were looking at, which is Tesla, which was down 2.85 just before the break, is now down 3.37. So when you're dealing with options are very different to the stock itself. The premium that has just disappeared in the 5 minutes we've been away is actually quite a big percentage. So what I'm going to suggest, now here is this. I would recommend that you take off at least half the position right now. I've got a peak D. I've got a peak E in leg E in the 120-minute chart. The 40-minute chart is showing a peak D, and the MACD is still good. So I don't want you to get out of the position because if you got in really nicely, there's a chance that if tomorrow doesn't turn out to be as bad a market that many people are thinking it could be, if the news is taken, the jobs news is taken as a negative for the market, not necessarily a negative for the economy, but a negative for the market, then you got that vulnerability. So I don't want you to give back gains. I'd recommend think it through. There's still a little time. I can still see a bounce. We're so close to the 200-period moving average at 225.10 that I think there will be a little bit of a bounce in Tesla over the next hour or so. But I'm going to make the suggestion that because it's this very strong leg A up in the daily, there is that chance. I've got that phenomenon. I'm actually be discussing it on Saturday at the Master Trader Series that I'm doing in the Boston area, that single leg A, because if the MACD deflects lower and it's a weak stock, overall it's a weak stock. I'm treating this as a counter trend bounce because I think that the monthly chart and the weekly charts are saying to me, be careful. Tesla, in fact, could be making a little bit more serious of a top. I think it's now getting a lot of headwinds as well as some things that are working for it. So I would recommend doing one of two things. One is I would either just get out of the position completely right now, or I would scale out. I'd get out of half, but I wouldn't give it more than another, 225.90. I'm already starting to think, wow, if this fails, it can quickly go down to 222 and take away a good chunk of the profits. So I'm thinking, take quite a bit off now. And you know what? If it's successful, it means that Tesla could have leg B. Then I'd be real concerned. I don't think it's going to go too far above the 235.75 high that it made today. So yeah. I'm only looking at perhaps a doji candle of the 20th of March, 239, which is really nice. I mean, you're not going to complain, but no. I'm saying at best, and then I think it takes a digestive phase. So I'm inclined to take those profits, a really great entry point, and also a very nice exit. I take some of it off and then give it a little bit of time, but not that much in points, 225.90. Even if I had a bounce from there, I wouldn't want the risk of it pulling back deeper than that.
Right.
So I hope it helps you. And then, what?
Yes. Thank you so much.
Good. And then by Monday or Tuesday, you could even have another trade that could be very successful in Tesla. I just clean it up, wait for everything to settle tomorrow, and then have another stab at it. Hey, congratulations, Naheed.
Thank you.
My pleasure.
Bye-bye.
Let's go to Victor in Paramus, New Jersey.
Hey, how you doing? I was just wondering, where do you think KO's going? It hasn't gone anywhere in a long time. Their earnings come out April 15th.
I was April the 15th. I was wondering about that because it's an interesting thing. Let me just get Coke right here. KO is the symbol, folks. We're looking at Coca-Cola Company trading at 38.18, it's down 15 cents. Now, I made a big thing about this a while back, and I said, unless I'm completely wrong, two things are happening. One is the whole area in the soda field, way too crowded. There is nothing that you can buy anywhere that is plain. Try to find a plain yogurt, plain anything, plain water, just anything. There's flavored whatever. And I'm busy saying to myself, how can that be good for business? How could Procter & Gamble be doing so well? How can these guys be doing so well? There must be so much waste when you got to make so many variants now of products that used to be just plain. I mean, it's just one kind, or maybe that and lemon, if it was one of the fragrances for the bathroom, whatever it is. I don't know. All I'm looking at is that I think that Coca-Cola has made a major top in the monthly chart. It's got that H pattern, and it's unusual that I've got a G at the top in the monthly. It does happen, and I think this is one of those cases. At 43.43 way back in May of last year. Whoa, that's great. Can you hold on?
Sure.
Okay, because I wanted to talk about it because I think it's still going to go down a little bit more, and I want to discuss why. So I'll be back here in a moment, folks. The Dow is down, only down 11. S&P is down 2.5. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. I'm looking now at, I wanted to check the difference between PepsiCo, what is it called? PepsiCo Inc. and Coke. And I must say, Pepsi's a much better looking chart because they have other products as well. There again, there's this huge thing of variety. And I'm suspecting that in fact, in the den, J&J just put Americans cut back on soda at an accelerated pace last year, extending a slow retreat from the category that began a decade ago, down 3% this past year. So Victor, I would not be buying Coke, even though it's got a dividend and all that. As a better chart pattern, I think Pepsi's a better one. I'm not sure I'd be buying either one, though. Mm-hmm. So I'm going to recommend, because Coca-Cola looks to me like it wants to test the left side low of 37.88, which is less than a point away because we're at 38.17. But I can tell you this, that if it takes it out, then the left side low bar of 36.89 of the 21st week of the 21st of February, and then earlier back in October, 36.83. That becomes very important, and becomes important in the weekly chart, and even more so in the monthly chart, because I don't have any signals in the monthly to say that it's going to rally. I've got more signals that say that the candle of March, with a high of 39.02 and a 36.89, that could produce a trading range, and that we're probably going down to the lower part, which is only a point and a half away, 2 points away. No, just a point and a half away. But if it breaks that, that's going to be very negative. So, Victor, I'm going to suggest, I can't give you any signal yet to say other than just a little bounce, which I just don't think you want. You'd like a move that's going to go from 38 to 42 or 44. I don't see that right now. So I'm going to suggest hold off. I wouldn't be doing anything with Coke.
What
Is that
about
okay?
Twitter? Do you see any stock bounce in Twitter coming? It's been going down every day for a long time.
In which stock?
Twitter, TWTR.
Yeah, this is a very interesting one. TWTR. Twitter has the pattern that I'm talking about. It's what I call that H pattern or the arch pattern. It's sitting right now on the 200-period moving average in the weekly, and the weekly chart from last week's what I call a Chapman wave Roman candle, and that has a low of 43.31. And my rule of thumb, it doesn't matter what time period you're in, if you start to close below halfway of the wick, in this case that would be around about 45.66, you're probably going to test the low. I would wait to see how or if the low of 43.31 is tested, and if it's tested, how about we look at this again on Monday. I wouldn't do anything right now with Twitter. Even if it bounces tomorrow, that would be okay. But I want to see how it holds that low. I'd be prepared to look at it again early next week. But so far, this is not a great chart pattern at all.
Okay. 43.31, though, is going to hit there, you think?
I think it will hit there. And how it handles that is going to, if it just goes right through it, then it's going to go test. Wow, this would be terrible. Test the 38.80 all-time low. Oh, man, it'll be so disappointing for Twitter followers. But be careful. I wouldn't play games with this just yet. I'd wait for some kind of a basing for formality to take place, and that might take 3 to 5 sessions. But let's see how that 43 area holds. Okay?
Okay, thank you. Okay.
Thank you very much for calling. Now, folks, I had a couple of emails. Two emails I want to get to. One is the question on, what was the question? Good morning. Please, could you look at PEIX? I think something is up with this company. Where would you start a long position? I will listen to the show. Thanks. So we are looking at PEIX. I'm calling this a peak F. And what the heck is PEIX? Pacific Ethanol Inc. What I'm looking at is the top that's been formed. No, I shouldn't call it a top. The formation and pattern that is concluding here is that the spikes to the top have formed an up channel. And that up channel is almost like the inverse of one of those things that I call the falling axe pattern to the upside. This is possibly to the downside. My big caution here is that you want to know where I'd be looking at it. I'd only be looking. I wouldn't be touching it just yet. Why? Because it's not finished yet on the weekly chart, and that weekly chart will have a very negative shorter term pattern if it closes towards, it's at 16.13 right now, down $1.13, down 6.52, and that I believe is ethanol. I think someone, Z in the Den spoke about it, ethanol, right. And as an ethanol stock, I haven't got the symbol for ethanol right now, so I can't look at it, but this is leg D in the weekly chart. I don't want to do the monthly. The monthly is just in a retracement. It's attempting to form a very big bowl-shaped base. Now, what I will say is if this thing holds PEIX, Pacific Ethanol Inc., if it holds 1485 to 14, give it a little room, 1463, and then bounces, that's going to be really important. If it just goes right through, and in the next 3 to 5 trading days, it takes out the doji candle low of 1371. Doesn't sound like much, but the way the speed that it's pulling back is as quick as it went up. So I'd be real careful because the MACD and stochastic are saying, be careful. There was no validity to the bounce, the last 3 bounces to highs. The monthly chart, the weekly chart, that's the reason why I'm saying I would look at it if it held that level. So don't do anything. I hope you aren't in it. I don't think you are because you asked where to get in. I'd look at it. That's all I'm doing, looking. I'm not buying. At the 15, well, it'll be Monday, Friday's tomorrow. So the Friday support is 1482 on the line, and then Monday is 1492. Yeah, that's what I would say. I'll give it a little room, around about 1450 to 1430. How that holds, how it bounces back, that would be really important to me. I'm watching it closely. I think in the near to short term, I think it's coming down. It's going to fill the gap. So not fill the gap, I meant fill the space between the 1255 low on the 11th of March and the 1371 low of the 27th. That's the area I'll draw it in right now. So if you're looking at Tiger TV, right there, I'm drawing it in. That's the area of support. Absolutely critical. If that breaks, watch out, because there's that gap with a low of $11.10. I don't even want to talk about that. Let's do one thing at a time. The weekly chart is saying great energy to the upside, lovely technicals. I just don't think on a shorter term I want to do anything. That 1334 level, the 9-period moving average in the weekly, that's what I'd be watching. So I hope that helped. And good. So thank you for the question there. Then I had another question. You know, I was going to show this in great detail this morning. There's a stock that we bought yesterday, 2 days ago. It was a company that one of the most famous companies in the United States. They went bankrupt. I believe they went bankrupt or they folded, whatever it is, but they disappeared, and they came back with another name using the second part of the name. And it's up in the northern part of New York State. That's where the company was located. Now they have so many patents. I think it's a patent company more than anything else. So it had a spectacular move. It ran up. I love the move, and I said, let's buy a half a position. Well, we put a stop in, and yesterday there was this crazy trade which appeared to be left over from the previous day. I even made I can't find it now. I even made a copy of the time and sales because I was going to show it to subscribers. But then the raised stop that I had, which was only a 37 stock on a $32 trade, so it's 1% or something as a stop on a half a position. I decided that I wouldn't make a big deal about it because it did subsequently bounce, and then it went down to what would have been our stops. It would have been taken out either way. Now, this is interesting because this is exactly what I thought would happen. I get a question from one of my subscribers, and so Joseph writes, "Hi Basil, I'm relatively new to the trading craft. Yesterday I set my stop on this particular stock at 32.56 per your suggestion before the market opened. Since I'm new, I'm using very small positions while I learn." Hey, that's what I love about subscribers. Just you start off slowly, get to know my methodology. It's the best way to do it. In one account, the stop took me out at 32.41. In the other account, the stop took me out at 31.91, which was the actual low. That was the low. And I have to wonder how the stops really work, because the stop should be at the price or is close. So something a little weird is going on there, and I'm not sure that there's really a case or anything there. I don't know how those stops work. It should have been, it should actually have been right at the price because it opened higher and it went down there. It did it very quickly, but it went down there, and that was a sale that was shoved in there. It was put in there, and basically it wasn't even close to anything that it was trading at. It was up in the 32.90 or 80 area, and then poof, suddenly there was this thing. I wonder if I can find it here. So here's my answer to that. My answer to that, so now it goes on. I'm aware that there was an opening gap down. Well, the gap down, that's interesting because it actually opened up quite normally. It was a very nice. Don't tell me I took it away. Oh, no. Oh, did I? Oh, I don't have it anymore and I can't find it. I'll try to find it because it doesn't trade that heavily. Maybe I can get it from yesterday. I doubt it. But this is a big issue with stops. I still believe in stops. So I'm aware there was an opening gap down yesterday. So the fact that the gap down jumped me at 32.56 is not surprising. It shouldn't have done that. It should have just been a very normal stop, and it should have been taken out. However, the sell prices I got, especially the 31.91, were negative surprises to me. Certainly to me too. And he mentions who his broker is, and he says, did they treat me fairly? I'm going to make a suggestion. And the suggestion is that I wish I had it because the next trades weren't even close to that. They were higher. Oh, I don't know if I'll find it. So my suggestion is going to be give your broker a call and just very casually, just say this is what happened, that is what transpired. Was that a fair trade? Just go straight out and say to him, I don't make a big deal about it. I intend to do a lot of trading with you. You'll more than make up whatever it is. I just want to know, is this a fair trade? That's the way I would deal with it. We've had this, when the crash happened, that flash crash, we were short the DXD. We should have made a fortune. And for some reason, the DXD, which is 200% short the Dow, instead of dropping 10 points or whatever it was, they moved it up. I don't know how they did it. And they took us out on the upside. I think we might have taken a tiny loss instead of a whopping profit. It was impossible to say what happened. I don't know what happened. It was impossible. The market opened down, and then it was down like 100 and something, and then out of the blue went down 900 points from there. How can 200% short go up above the opening price? So I don't know how these things work. And sometimes you just say to yourself, you know what, I'll make it up over a period of time. I don't know. I don't even know how to answer that, other than to say that the action in that same stock, which is now up 5 cents from yesterday's close, is acting really well. And I was going to say, if you weren't stopped out, because some people actually, I believe, weren't stopped out in that original position. So if you We'll deal with it. Don't worry. This particular stock, I suspect, at some point is going to more than make up for that very tiny loss that we had. Don't worry about it. I'm way beyond getting upset at what happens in the brokerage area. And as for the high-frequency trading and all that, my analysis says that majority of people are really missing the point. Is it rigged? I think the concept is rigged. They would like it to be rigged. In reality, there's something else going on there that has to do with the speed of execution. And let me tell you, I watch the futures and the price when I'm trading the cash, and I watch the Dow and the S&P futures. I got them right here on a 1-minute chart. I try to front run myself with no knowledge whatsoever, because if I see movement in the cash, sometimes I can move quickly to buy the E-minis, and sometimes I say, whoa, be careful, that's a false break. So it's what you learn and how you use it. So it's a very complicated issue, and it's never going to get better until someone has suggested, why don't you do what they do in the speed racing? They put governors on cars. I happen not to like governors. It's the art, it's the skill. This will resolve itself. So the same thing I'm going to say to this particular subscriber, don't worry. Call them. Just call. Don't make an issue. Just call them and say, hey, how about that? It was your smaller position, and see what happens. And you know what? Making contact with a broker is also not a bad thing. You might need them someday when things are down and you need to call them up for something. So don't worry. That amount of money is very small. We'll make it up. And it's big to you, but small to the overall scheme of things. Now, the other thing is, I want you to talk about my Master Trader Series Level 2 coming up on Saturday. Still time if you want to get in. I'm going to be sending off the curriculum tonight. And so give me a call, or give TFNN a call. So I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Just want to really quickly thank you, Sean, for sending that over. Just said, actually, I would have found it. I just didn't want to get to my email. I remembered I did save it. So you've got, it opens, this particular stock opens at 9:30 at 32.90. The day before it closed at, I think, 33. So 32.90. Then it goes 32.40, 32.40, 32.40, 32.40, 32.40, 32. So it gets taken out. Now it suddenly goes from 32.40. There's a whole block of 200 shares, then 50 shares, then 200 shares, then 100 shares at 9:30, 0.32, 06.14 and 0.32. Those within half a minute at 31.91, and then it goes back to 32.89. You know where? So one of the things about buying fairly lightly, it's not a light volume stock, but it's fairly light volume, is that you are subject to some of these crazy things. I tried to take it in the day before by making it a 1-point stop. You know what? This is kind of par for the course I anticipated, but now that it's acting well within these conditions, this is on my list. We will more than make up the little tiny loss if I'm correct in assessing that this is a stock that is in recovery mode. So we just deal with that. But thank you so much for sending it. Okay, a couple of quick things. I had a question about ESV. ESV. So ESV is, in fact, energy company Ensco PLC, trading right now at 51.23, down 88. The question was, where would I be considering buying it if I would? And the email I gave the answer here that I would wait. At this particular point, basically a single leg A up. I want to see how it pulls back and how the ESV holds the lows that were made recently at 50.50 and 50.51 on the 24th and 25th of March. I'm not prepared to do anything yet. Why? Because the monthly chart is this arching over with the 9-period moving average down, MACD down, stochastic kind of holding okay at the lows, but not great. And the weekly chart is saying there is strength. There's a divergence there. Keep looking at dividend stock. I don't want to touch it yet. Maybe Tuesday, Wednesday of next week, I'll be looking at it. And the other question was ACH, which is like Alcoa in China. It is an aluminum core of China. And it had a great move up to a leg D. Nice. If you were in it, congratulations. My real issue is going to be in the pattern that we're looking at. I'm going to be showing patterns like this on Saturday. Go to the front page of TFNN. There's just enough time now. I've got room probably for another one, maybe two people. If you want to come, all it needs to be that you've used the Chapman Wave methodology. You've got my CD introducing the Chapman Wave methodology CD, or you've done my webinars, but you understand these patterns I always talk about. So you're comfortable with that's it. That's a prerequisite. So go to the front page of TFNN, call TFNN, ask them a question. Maybe they'll get to me and I can go through things with you. Just enough time to do that now. Go to the front page of TFNN. Now, the other question was with ACH, this H pattern. This can be a very bullish pattern. So I'm keeping my eye on ACH. It's at 8.87. I would not buy it right here for a couple of reasons. I would like to give it a day or two. If I miss it because it bounces to the 905 200-period exponential moving average, that's okay. It's still a good stock at this particular point. So I do like it. Good dividend, etc. Now, let's go through this quickly because we've got Larry Pesavento coming up. Larry will be going through, I'm sure, a whole bunch of the commodities and currencies that he always looks at on a Thursday. We've got leg D up in the Dow. Normally, this is where I'd be negative. I'd be wanting to short whatever I could. In my opening call, we have long positions, and they seem to be working okay. I'm going to make it real easy. If tomorrow at 8:30, if the news is taken as bad and the futures then drop 12 points, I'll be looking to say on a short-term basis, we could be pulling back. But 91% in the stochastic, in the daily, I have to tell you, my bias here is to be looking towards long side.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.